What is good, everybody? Spektrades back here, and in this video we're going to over on how to enter trades using the lower time frames and our best entry models. Before we get started on the video, make sure to give me a follow on Instagram at Spektrades. This is where I am most active at. If you have any questions, make sure to give me a DM on Instagram at Spektrades. Let's hop back in the video. So for number one, we have to identify our higher time frame direction. So right here we see that price came from this low and gave us this higher high, and then from this higher high we got this higher low, and then price comes and gives us a higher high. So that indicates that we are in a bullish market structure. So that's our number one. We have to identify our higher time frame direction. And then for number two, we have to identify our range, our swing points. So right here was our H4 structure. We see now that price from this low gave us a breakup structure of these old highs right here. So now our range low is from this low to now this high. So now this is our swing points. We are going from this low to now this high. This is our external range liquidity, and this right here is our, and everything in here is our internal range liquidity. So this is number two. We have to identify our range, where we are at on the charts. So after we identify what type of structure are we in, or we are in a bullish or bearish structure, second, we have to identify our range. Now let's go to number three. So for number three, we have to identify our momentum. How is price moving inside of our range? As we can see from this low to this high right here, price is just moving sideways and moving correctly back to this demand zone. That shows us correct momentum. And now if price from this high right here just was coming down like a knife, like a hot knife, we will not be using this range right here. This range right here will just be fail. Like it would be like this, this low. Now, if we see price just falling down like this, this wouldn't be like truly a good sign for us. We have to see like a corrective move. Price has to be coming down inside of our range correctively. So this right here was a H4 structure, but now on the M15, we see that price is just moving back correctly. This is us now identifying our momentum. Now we are in a correct momentum. That means now on the lower time frames, we can find us a correct trades that will come back to come and clear our range high. Now let's go to step 4. And now in step 4, we have to identify our premium and discount of the range. So make sure you watch the last video where I go over on premium and discount zones, where I just go in depth on premium and discount, on what it is and how you can find a trade inside of premium and discount if you haven't watched that already. I released a video yesterday on premium and discount. So right here on number 4, we have to find our premium and discount range. So from the range low to the range high, we grab our Fibonacci. So now, because we are in a bullish format, we have to wait for price to come back down to discount before we go higher. So right here is our discount, and here is our premium. We look for sell setups at premium. So right here, we're gonna look for sales back down, and then at discount, we look for buy setups. So when price comes back down to discount, that's when we'll be looking to go long to clear our range high. So that was number 4, to look for our premium and discount of the range. Now let's go to step 5. So for number 5, we have to identify our higher time frame POI, our supply and demand zone. So right here was our 4-hour structure. So inside of our 4-hour structure, we have our range. This was our range low, and then our range high. We know that this is external range liquidity. Price will have to come back up to clear this right here. So inside of our range, what is the higher time frame point of interest? So right here we see we have either a 4-hour order block or a type of 4-hour point of interest that we use as our demand zones before we go back higher. And we see that we are in discount. As we stated before, in discount we look for longs, and in premium we look for sales. That was number 5. Now let's go to the last step. And now for the last step, in the lower time frames, we wait for price to give us a structure to change, and then we execute. So as we can see here, we had scaled down to the M15. The M15 was crawling back down to our H4 point of interest, and then price tapped into our H4 point of interest inside of the M15. But we're not just gonna enter right off of the H4 point of interest. Our stop loss will be way too big to enter, so we have to scale back down now on the 5 minutes. So right here, as you can see, this is M15, price tapped down into our H4 point of interest. We have now to wait for price to come and give us a change of character. Now that we see price give us a change of character, clearing the old high right here, I also have a breakup structure or change of character video. Make sure you watch that also. just because it goes more in depth about this this topic. So after this change of character, then we look for price to come back down, tap into a order block or some type of point of interest before we go long. This is where we enter our trade on the lower time frames. So first we have to identify what structure we in, and then we have to identify our range, and then from our range we identify our momentum. Is price coming back down like a hot knife, or is price crawling back down to our point of interest? And then we identify our higher time frame demand zone. So as we can see here, we had a H4 point of interest, a H4 demand zone, and then we scale back down to the lower time frames for price to come in, purge an old low, give us a liquidity sweep, and then come back up, give us a change of character. And then from that change of character, we look for a order block or a type of point of interest to then go to the higher time frames. So that is how we enter our trades on the lower time frames. This is just a basic schematic format. Now let's look at some charts to just see it better. So right here, we are looking at some charts just to see it more clearly. We see that right here, we had identified our range. So right here, we had identified our structure. We see that we are in a bearish structure right here. And then price left us this H4 point of interest, and now this H4 imbalance. We know that price will come back up and fill this imbalance, and now tap into this H4 point of interest. And then now we're gonna scale back down to the H1 to see what price is showing us more. And now on the H1, we see that price haven't yet passed our equilibrium phase, right? We know that for us to sell, we have to wait for price to come back into premium pricing. As we can see now, price is just playing around, still in discount. So right here is just, we can just look for longs, I'll say right here, before price come back up here inside of our premium pricing. So right here is premium, and below here is discount, and here in the middle range is equilibrium. We have to wait for price to cross here before we can sell back down. So right here we have our external range liquidity, our week low. We have to wait for price to come in, tap into our premium zone, and tap into our H4 point of interest before we can scale back down. Now let's scale more back down to see what we can see. And then here on this 15-minute outlook before, we see that price came from the discount. Boom. Right here is discount. Price came from discount and then went all the way back up to premium to tap into our H4 point of interest to then give us a liquidity sweep. Boom. And then give us a change of character. And now from this change of character here, we have to pick the point of interest that is near to the change of character. What we can see, we see that price left us this mitigation block because it's failed to give us a failure swing. Price failed to go higher, but price respected this old high. Let me remove all this. Price had respected this old high, and then it came back and purged lower and give us a firm break of structure. And then, so now this is our change of character. Price went from being long to now looking to go short. So this is the 15-minute outlook before, and now let's look at the 15-minute outlook after. And now for the 15-minute outlook after, we can see that price came, give us the liquidity sweep of these old highs, tap into our higher time frame point of interest, just like we stated, boom, and then give us a change of character. Price was going long, now price is looking to go short. Price came back up, tap inside of our mitigation block. I also had a mitigation block video also. Make sure you guys watch that also, where I go over the mitigation block. Price came back up, tap into our mitigation block, where we're looking to target. We are looking to target these old lows right here, these weak lows. This is our point of interest. So this was a basic view. I have showed the schematic format and now on charts format. And now let's look at some more lower time frame entries on how we can enter our trades. Just like just simple schematics. First, we have our inducement entry. We can we may see price tap into our higher time frame point of interest, come back down, give us a inducement. I also have an inducement video also. Make sure you guys watch that. Give us an inducement and then come back up to give us a change of character. But price will have to come back down and clear that inducement. So price comes back down, purge through that inducement to go back higher. Boom. So this is our inducement entry. For our other lower time frame entry, we have our internal range low entry right here. So as we can see, price tap into our higher time frame point of interest, and then inside of our range, price was just building up liquidity, and then price purged through it. This probably some equal lows right here. Tap inside of a order block, and then come and give us our change of character. Boom. And then from our change of character, we know that price will come back down, retest it, another OB, boom, to go higher. So this is like a internal range lows type or a continuation type lower time frame entry. And then here is our double confirmation entry. So price may clear these old lows right here, come and give us a change of character, boom, and then come back down, give us, tap into a order block right here, and then go back up, give us a break of structure, and then from that break of structure, we come back down. This is our return to order block entry, our RTO entry. Price comes back down, tap into another order block to go back higher, boom. So this is our double confirmation entry. And then here is our typical reversal entry, just like we stated in the top-down analysis we did, right? So price was coming down, creating lower lows and lower highs, lower lows and lower highs, and then price purged through these old lows, boom, and then give us a break of structure, boom. And then after that break of structure, we know that a inducement or a short-term liquidity low would be right here. And then price comes back up, give us a break of structure. And then from that break of structure, price purged through it all, tap into our order block or a point of interest that we have to then go back to higher prices. This is our reversal entry. And then right here is just some simple entries that we have right here on the live charts. We see that price took liquidity from these old lows, purged through them, and then give us a change of character. And then after that change of character, price comes back down, taps into this IPA, this inefficient price action, comes back down again once more, just like we stated in the double confirmation entry. Price comes back down one more, tap into this IPA again, to then go back for higher prices. Then right here is our change of character entry, just a internal range liquidity entry. We see that price clear these old lows to then come back up to fail to give us a formal break of structure right here. Price was just clearing liquidity right here, right? Price failed to give us a formal break of structure. And then we see that price purged through these old lows right here, boom, to tap into our order block right here that was lying right below these old lows. And then for price to come all the way back up to give us a clean change of character. So price was going down, played inside of our higher time frame range, purged these old lows to then go back higher. This is another type of our entries. Now right here is the same type structure. Price tap into a higher time frame point of interest, boom. And then inside of that higher time frame point of interest, we were waiting for a liquidity sweep. Price give us a formal liquidity sweep, and then goes and give us a break of structure. And then from that break of structure, price starts building liquidity inside of the range right here. So this was the low of the range, and then this was the high of the range on the lower time frames. So price comes back down, purged the old lows, taps into this 50% of the order block to then clear the range high. So this was another type of our entry. And then another type of our entries is right here. You can see that price came back up, tap into this 15-minute point of interest, boom, and then give a liquidity sweep of these old highs right here inside of the 15-minute point of interest, and then came and give us a change of character. But I just put a break of structure right here just to make things simple. A change of character is just a type of break of structure, but just market just going up, change of character. So right here, price came and give us a break of structure of these old lows right here, boom. And then after the break of structure, price was just building liquidity inside of the range, boom, inside of the 15-minute point of interest. So we wait for price to tap into a higher time frame point of interest, and then goes and give us a break of structure or a change of character, as we state, or a market structure shift, right? So price, and then price is building up liquidity inside of the range. So price come back up, clear the internal range liquidity, tap into our order block. What are we targeting? Old lows right here, boom. This is our external range liquidity. Well, that be it for the video. I hope you guys understand now on how we enter our trades using the lower time frame entries. Make sure to like, subscribe, and comment down below on all the videos that you want me to simplify and just makes things simple. This is it. Spektrades out.